Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, I wanted to get into a sensitive subject, especially for some of the younger viewers out there, and that is between buying versus renting a home. So I'm gonna divide this video up into two parts. The first half of the video is gonna be in front of the whiteboard. I'm gonna go over some of the ownership versus renting pros and cons. And then the second half of the video, I'm gonna go into an actual financial calculator provided by ofdollarsandData.com. My friend Nick Majuli, he's got an excellent calculator that helps you differentiate the math between buying and renting. So the first half of the video, we'll go over some of the pros and cons. I'll try and stay away from the finance side of things. And then second half of the video, we'll go in front of the computer and run the numbers. Stay tuned. Okay, so we're gonna get into the buying pros and the renting pros, and I'm gonna do this in one quick shot. Some of this stuff is common sense, but for some of the younger people out there who have never really rented or bought, maybe they haven't thought of some of these things. So let's just knock out buying real quick. So equity. So when you own a home or you're making payments towards a home, you're building equity over time. So just very quickly, if you don't know what equity is, say the house is worth, for easy numbers, $100,000. You can sell it tomorrow for 100 grand. Say you owe $70,000 on it. That difference of what the house is worth minus what you owe on it is the difference, okay? That's your equity. So if the house is 100 grand, you owe 70, you have $30,000 of built up equity into that home. You don't necessarily get that with renting. So think of it like whole life insurance versus term life insurance. And stay tuned for our sponsor later in the video. So stability. So stability, you're kind of planting your roots. It gives you a sense of stability and living in a community. You're involved in the community. You're vested in the community. You know you're not moving every couple years. It allows you to plant your roots. So this is applying more towards families or people that are in a long-term career. Number three is control, okay? So you can modify it, you can decorate it, you can expand your homes as you see fit. Unless you live sometimes in an HOA, a homeowners association, this could be different. But for the most part, you have more control when you own the home that you live in. And then finally, pride. I know this is an intangible and that's what I'm trying to do with the pros and cons. Then we'll get into the numbers in the second half of the video. But with pride, you have psychological benefits, okay? So pride isn't necessarily always a good thing in all aspects of life, but with home ownership, you know, you like to keep it clean, you like to keep it organized, you like to landscape, you feel like you're vested in this asset and there's a reason for you to keep it up. If you're renting, you're kind of just like, whatever, I'm only gonna be here a year, who cares what it looks like, right? That kind of a thing. So let's talk about the renting pros. So we have flexibility, okay? So you can move easily, you can change jobs easily. You don't necessarily have to stay somewhere for a long period of time for it to make financial sense. So flexibility is a big one. The next one in the renting pros is maintenance, okay? So with home ownership, this will be one of the cons you'll see on the other side, but basically we have maintenance. So there's some upkeep, you don't have to worry about major repairs, roofs, HVAC systems, things like that. Not all landlords are great, and they may not keep up with every single thing, but for the big ticket items, you typically don't have to worry about when you're renting. Number three are amenities, okay? So these are things like pools, gyms, community rooms, things that you may or may not be able to afford. You know, that's not saying you can't have a pool in the control part of buying, but pools cost, 100 plus grand these days, right? So amenities. And then finally, it's a smaller upfront cost. So typically when you rent, you owe, first month's deposit plus maybe first month's rent down, okay? So think of that versus putting, 15, 20, 30% down on the price of a home, right? So it's a lot smaller number. So these are the pros. Let's get into the cons and then we'll get into the math. Okay, so let's go through some of the cons of buying and some of the cons of renting. Some of these are just the inverse of the pros, so I'm not gonna spend too much time on this. So maintenance, when you're buying, this sucks. You're responsible for everything. HVAC, plumbing, unexpected costs, water boiler, yard maintenance, you name it, never ends. Flexibility, so lack of flexibility or less flexibility. It's harder to sell and move or rent out immediately if you do have a big job opportunity outside of this community or neighborhood or state, for example. Bills never end and they only go up over time. So property taxes, home insurance, emergencies, they never go away. You're always gonna have to pay bills and you can't control things like property taxes. Stop paying your property taxes and see who owns your home. Equity. So negative equity, 07, 08, people understand this. So if you go back to the example of the house being worth $100,000, Sometimes people owed more than what the house was actually worth, and they couldn't even sell the house to get out from under it. So if the house is worth 100 grand and you owe 120 because the price dropped 20, 30, 40%, well, you're screwed. So you have negative equity. A lot of younger people don't even think that's possible these days. So renting cons, lack of control. So all changes need landlord approval. You can have rent increases. You can have notices to vacate if they want to sell the house. Again, you're not building equity, you're just renting. So you're paying off someone else's asset. There's no wealth creation. And then temporary, okay? You might feel less settled or invested in a community. So, if your kids go to school somewhere or, you've been in this community for generations, you might feel more vested, right? Renting is temporary. And then finally, number 4 and 5, we have poor maintenance. Just because you do rent doesn't necessarily mean that the landlord is gonna be great. You could have a deadbeat landlord or even a slumlord. And then finally, privacy, okay? Thin walls, noisy. The landlord or property manager comes up to check in on you, right? Lack of privacy is definitely a concern. So with the pros and cons out of the way, let's get into today's sponsor, Policygenius, and then we'll also get into the numbers in the second half of the video. It's 2025 and it's time to get your financial house in order, but this isn't some fad diet or a new gym membership. This is the time that you set you and your family up with a solid foundation for your financial future. That foundation starts with a life insurance policy using Policygenius. Policygenius makes finding and buying life insurance so easy. I always recommend Policygenius because not only did I use it to find my term life insurance policy, but because the process was so simple and it saved me a ton of time. We spoke to one of their licensed experts. She gave us options based on the amount of insurance coverage and term of the policy that we thought was appropriate, and we went from there step by step. The process couldn't have been simpler. With Policygenius, you can find life insurance policies that start at just $292 per year for $1 million of coverage. Some options are 100% online and let you avoid unnecessary medical exams. My wife and I didn't have to have any medical exams and did everything over the phone. I like working with Policygenius and recommend them to everyone because they are simply a marketplace that helps people find and buy insurance. They are not an insurance company themselves. They can help you compare options by getting quotes from America's top insurers, and you don't have to worry about them having your best interest in hand. They work for you, not the insurance companies. Sometimes there are financial advisors or insurance salespeople that sell you the policy that makes them the most money while not having your best interest in hand. I didn't have this worry with Policygenius. Check life insurance off your to-do list in no time with Policygenius. Head to policygenius.com/whiteboardfinance or click the link in the description to compare free life insurance quotes from top companies and see how much you could save. That's policygenius.com/whiteboardfinance. Okay, welcome to the second half of the video where now we take a look at this from a numbers perspective. So this is a calculator by my friend Nick Majuli. This is his rent versus buy calculator. You can find this on ofdollarsandData.com. I also have a home affordability spreadsheet that I created years ago. Thousands of you have gotten value from it. So if you want that, check out the Patreon link down below. But let's get into this. So before we actually get into the calculator itself, I want to actually go through a couple numbers here. So some of the variables are going to be monthly rent, future inflation, home price, property taxes, et cetera, et cetera. So we can't really predict the future. We don't have a crystal ball. But let's see if these starting numbers are even accurate, okay? So if we go to the St. Louis Federal Reserve's website, you can see here that the median sales price of houses are $419,200. That's for the whole country. Okay, that's median. So remember, we're going back to elementary school here, mean, median, mode. Median is not the average. So the median rent is around $1,600 per month. If you look at average rent, you're looking at about $2,000 per month based on Zillow's data, okay? So we'll go into here and explain what this calculator actually does, and then we'll input some fair numbers to get a fair shake. So this compares the cost of renting for 30 years versus buying a home with a 30-year fixed rate mortgage. The model assumes 3% closing costs, that rent and home prices grow at the future inflation rate below, so that's 3% right here, and then you can change the inputs. So we're not going to do $2,500 monthly rent, okay? Let's do something in between average, which was $2,000, and median, which was $1,600. So let's do 1,800 to start with. Again, home price is not 500 grand. We're gonna make that 420 based on the St. Louis Federal Reserve data. And then everything else here is relatively fair, okay? We're assuming a 20% down payment, even though a lot of people can't do that now. Interest rates are right around 7% at the time of this recording for a 30-year fixed rate, depending on your credit. We're assuming that your portfolio grows at 6%, okay, which is fair. It's anywhere from 6 to 10 if you want to look at the S&P 500. Property taxes 1%, HOA maintenance 1%. That could actually be really low depending on your HOA and the maintenance of the home, depending on how old it is and what breaks. And then future inflation 3%, okay? Is future inflation 3%? Probably low, but that's what the CPI says, so we'll just stick with that. Okay, so with all that being said, let's get into the monthly housing costs. So let's take some of this with a grain of salt. Nick's calculator is coming up with a total of $3,100 a month. Okay, so that takes into account a mortgage payment of $2,235, property taxes of $350 a month. That's definitely on the low end, in my opinion. $350 times 10 is $3,500 plus $700, $4,200 in property taxes on the year for a $420,000 house. Where I live, that's low. My property taxes are significantly higher than this. Maintenance HOA, $4,200 for the year, $350 a month. That's about right, depending on if you average out, getting a new roof, HVAC, water boilers, maintenance, upgrades, all that stuff, HOA costs. That's fair. Insurance, $175 a month, a little bit on the high end, I would say, but just depends on where you live. So with all that being said, the final decision is to rent. Why is it to rent? Because if you assume these numbers with a 6% growth rate in your portfolio versus buying, you're going to end up with about $430,000 more at the end of 30 years. Your final home value is going to be $1 million. Your final portfolio value is going to be $1.45 million. Okay, so if you look at the chart here, you can see here that the big divergence really starts. It's always diverged, but it really starts after like year 15, right? You can see the portfolio value is at $552,000, home equity is at $407,000. Once you actually get to the end, assuming this growth of your property, again, you're going to be at $1 million in the value of the house and home equity, if you will, and then portfolio value is $1.45 million. Okay, so that was Nick's calculator in a nutshell. You can play around with the numbers and the assumptions to get it more tailored towards you. Again, I just used the median rent, and I also used the median sales price of a house in the United States at the time of this recording. So I'm not going to run a million different scenarios. The video would be 30, 40 minutes long. You can just play around with it. I'll leave the link in the description below. Also, check out my home affordability spreadsheet. It gets very granular and gives you a very realistic look into what you can afford. You can check that out on Patreon down below. So my thoughts, just to wrap all this up in a nutshell, typically if you know you're going to live somewhere because there's amenities that you can't necessarily get elsewhere in the world, whether it's a cultural center, a church, a mosque, a religious aspect, whether it's a cultural aspect, whether it's a family aspect. Sometimes buying doesn't make financial sense, but from an emotional pride and all the other things that we talked about standpoint, it does make sense. If you're looking at renting, this would probably be for someone who is not necessarily tied down with, family, kids, wife, career, things like that. If you know you're going to be moving for your job a lot, then renting probably makes sense. My rule of thumb is if you know you're going to be somewhere 5 or 10 years or longer, buy the house probably makes sense. If you know you're moving around a lot for work, probably just rent. So for me, I personally own my home. I enjoy where I live. And again, there's amenities that I only have where I live from a family standpoint and things like that. So it ultimately comes down to you. Take a look at ofdollarsandData.com, Nick's website, play around with it, his calculator, and then also check out my home affordability spreadsheet. And as always, the algorithm absolutely hates my channel. I don't know why. I feel like I provide good value on this channel, but I don't know. So don't forget to comment, like, share the video with a friend, and then also send an email to YouTube CEO to get my channel right back on the right track. I'm just kidding. All right, everybody. Hope you got value out of this one. Have a prosperous day. Appreciate it. Okay, so just real talk, real quick. I know I usually end these videos on a funny note, but for anyone that's younger watching this video and you feel like there's no way you're ever going to be able to afford a home, just stay the path. If you have to, jump jobs every 2, 3, 4 years. Try and get a higher paying job every time you switch. I've talked about this in previous videos in the past, but you gotta be smart and you gotta be agile, and you have to separate yourself from everyone else. I know it sucks. I know it's harder for your generation than it is for, I don't want to say millennials. My generation's had it hard as well, but just stay the course. That's all I'm going to say. All right. Good luck.